And what have you found to be the biggest challenges of kind of moving this process of establishing a relationship? Look, when we first started chatting, right, the assumption was when you were raising money from the guys at Marcus, et cetera, at HFF or from friends and family, they knew you, right? They already knew you. They had a relationship with you. So now you're developing relationship with people that don't know you online. So what does that process look like? I mean, how do you think of that process as being similar or different from knowing somebody for years and years and years of having worked together with them or being actually related to them?
Well, again, we try to just establish an online presence and an online personality, and we try to give the investors as much value as possible. And this goes back to education and video, and we show our properties online. We show a lot of before and after. And that's the best way we feel for us to establish online credibility.
And was that something that the real estate websites, the crowdfunding websites have encouraged you to do, or is this something that you've taken on of your own initiative?
A little bit of both. Some of these ideas came to us via the crowdfunding industry, and through our own initiative, we decided to start doing it ourselves.
And so by doing it yourself, are you finding that the crowdfunding websites are consistently delivering full finance for specific deals, or as they get bigger, it gets harder to fill your own equity needs, that you need to go beyond them for marketing or for online work? Or just to kind of explain how those two things interact?
Sure. So our own internet marketing to grow our database of investors is really a constant evolution, and it's just something that's evergreen, and we're always trying to acquire more investors and ideally get them into our fund. When we're crowdfunding for a deal, the crowdfunding company usually tells us how much they feel they can raise, and that's the amount of allocation we'll carve out for them. So if we're buying a $30 million property with a $10 million equity check, and they say, Max, we think based on the metrics, based on the location, the asset class, we can raise you $3.5 million. So I'll carve out $3.5 million for them, and the other $6.5 million we'll take out to our investors, or we'll just fill it with our fund and maybe one or two investors.